Hey guys, B Twice here. Today is Sunday, July 18th. Hope everybody had a good weekend. We're going to be taking a look at the indices. We're going to look at QQQ, IWM, SPY, and SPX to look at an alternate TA method that it looks like it's correlating with where I see us going. So we're going to start off by looking at QQQ. Ultimately, towards the end of the week, I was trying to catch falling knife and it did not go so well for me. But with that being said, I still do not think the top is in. There is a lot of people on Twitter right now screaming that it's going to be sell the rips market from here on out. I'm not seeing that. There was a lot of put premium coming in on Friday. Throughout the beginning of the week, there was millions and millions of dollars on puts, and that was likely the hedge funds and institutions knew the drop was going to be coming, or really figured it was going to be coming. And then Friday, a lot of the options that I saw come through the tape seemed to be more retailish. And it's going to be easy money considering they didn't have a lot of time on the contracts. And so, if I was holding any puts and we drop tomorrow, I would take my profits quickly and roll them into calls. But that's just me, and hopefully I'm right on this. So let's start by looking at QQQ. Okay, so basically what I'm seeing is that we're moving up for a wave three, and that we haven't topped yet. I think that we're in the process of pulling back for a two, and we've either found bottom late in the day on Friday, which I don't think is completely likely. I think that the futures are going to open up pretty bad tonight. People are going to be scared. There may be some panic selling early tomorrow, maybe even at open, to take us down to this red dot line, the 355 range. Now, this line was drawn via the volume shelf. That's the next spot that has the most support for us, which is pretty obvious right here. So there's a good chance we're going to go down and tap that. I would be buying that dip. I see us ripping from there as a wave three, taking us up to about 370-ish on the Qs. Um, from there, we'll see a pullback, and ultimately we'll finish off by going up towards mid 370s, hopefully. I think a lot of this is going to be caused by big tech earnings coming up, and then we'll be pulling back for a wave four. So let's hope that that's the case, and let's hope that this is exactly what happens. But time will tell. So I'd be a dip buyer on QQQ. The one other thing I want to talk about, the Qs have never gone negative in July. So be mindful of that. So you'd have to go back to July 1st. Where's that exactly at? So right here. So the Qs have never gone negative, meaning that we should expect that the Qs are going to close somewhere above 353 at the end of this month. It'll be the first time ever that they went negative in July if it doesn't. So I would expect us to catch this support and bounce up, and then we'll ultimately see our flush that should take us down towards that level, if not lower, probably in August, or right after earnings. But I would expect the Qs to be positive this month. All right, let's look at IWM. So IWM is where I was getting burned towards the end of the week. I was trying to catch this. I was trying to catch this dip buy because I miscounted. And so obviously I was looking for a ripper because the last time IWM was severely oversold, which it is. Like, we're seeing bullish divergence right now on the RSI. So with that being said, that's why I was trying to catch this knife, because I was like, you know what, when IWM rips, it's going to move quick and it's going to move fast, and I want to have some short dated calls on that to reap the benefits. So I wasn't over risking, and that's why I was following my stop losses correctly. But what I see happening is that we're actually in this diagonal formation. Before, I was looking at this ascending triangle that ultimately we basically almost broke out. We almost broke the downside of it, but it looks like we're actually in this diag. So what we're seeing is a 1, 2, 3, and we're in the process of moving down for a 4. The 4 should bottom right at the bottom of this channel, which will probably be tomorrow. From there, I see us ripping back up to the top of the channel, and that should be in tandem with the S&P 500 and Nasdaq both going up towards all-time highs and crossing them. I think we're gonna hit this 237 range, and we're gonna get rejected. So if I'm in IWM, I'm taking profits up here. I'm not gonna wait till I get too close to the top of this channel and get blown out when it sells off early. Because so many people are going to be looking for this level or the upper channel line to sell, that I'll get out a little bit early, or I'll move up my stop losses appropriately. Because what I think is going to happen is we're going to get rejected up here. That's going to be our wave one. So we're going to have a beginning diag, or leading diag for a 1. It's going to pull us back for a 2, and then ultimately from there we'll rip to all-time highs. And then this drop should correlate at the same time as the drop in the Qs and the S&P 500. So I will be looking at this name to try to catch this pop up and then pull back, and then buy in at this pullback. So I'll be watching IWM to catch support hopefully tomorrow, with the rest of the market. Okay, so SPY. Um, SPY's another one where I was buying the dip late last week and I held. I did not sell because of what I'm seeing. What I'm seeing is there was other lines I drew on this chart before. It was at 431. It was at 433 and then 431 as strong supports. And what I was basically saying was I thought it was going to hold 433, and that's why I was a dip buyer. I was a dip buyer because I did not actually see it breaking 433. It was trying to break it multiple times last week. Finally, it did break it, and what do you know? It went straight to 431, which is what I said in one of my videos last week. If it breaks 433, it's going to head fast down to 431, 430 range. So now the question is, have we already hit bottom? So I was buying the dip more rather than being a seller on Friday and paper handing my calls. And the reason behind that is because I see it catching support somewhere down here. I don't think the market's topped. Now, I could be wrong. If the market's topped, I do have hedge. I do have puts in case I'm wrong on this. But what I'm seeing is that we're actually finishing off a yellow wave 5, which is this blue wave 5, which is actually a wave 3, which correlates exactly with the NASDAQ, and that we're going to be pulling back for a wave 4 correlating with the NASDAQ. Now, ultimately, what I'm seeing right now is that if we do pull back anymore, 428 is going to be the bottom. It's going to be the support off these peaks. So if you take the supports off these peaks, which you can see we've held it in the past when we tested it, that's going to be the bottom. So if we're lucky enough to get a dip tomorrow to 428, I will be probably tripling down on my positions. But with that being said, I will be opening more hedge appropriately as well in case I'm wrong, because right now it's risk reward. This is the uptrend line that we've been holding for quite some time now. Yeah, we dipped a little below, but if we break that, then we're going to ultimately go pretty low. We might go down to 400. We could even go down to the 380 range. So it would be a pretty big dip. So what I'll be doing is I'll be looking for maybe 3 to 4 week out calls, betting on the S&P 500 going up into this mid 40s range. I'll probably be looking at 440s. Ultimately, where I see us going is about 445 or maybe 448 or so before we get rejected and actually go to the downside. So with that being said, I'll be looking at August positions for the 440s, and then I'll be buying September or later puts because ultimately I want to make sure that I can still hold those puts for when we do get rejected up here if I am right. So ultimately look for 428 to be strong support. Maybe we hit that tonight because SPY trades 24 hours a day. Maybe we hit that tonight with the futures, and then by open, maybe it's already ripping. Maybe it's a quick sell-off first thing, and then by 10:30 reverse. But ultimately, I do see us going for a melt up, just to steal premium from all of retail who's betting against the market right now before we ultimately have our drop. I do think that our price target for our drop is going to correlate with this trend line. I don't think we're going to break above it. Maybe you go a little bit above it, whatever. But that's why I'm looking at somewhere in this mid 40s as a target. And what I do see it happening is by the end of July. I don't think it's going to take very long. I think big tech earnings might carry it there that last week, and then possibly right towards the end of that week, maybe Thursday or so, it'll just plummet. And ultimately, that's when we're going to go down and probably break this uptrend line and then head lower. So I do not think market top is in. So there you have it. I do think that the dip buying should occur tomorrow if there is still a dip, and then hopefully we'll get this move higher. The one last thing I wanted to look at is the SPX. So I actually saw somebody draw this on Twitter. I generally don't go and count the SPX because I do SPY and they're pretty much the same thing. But somebody else did some TA, and this guy's actually a perma bear. He's been calling for the death of the market for God, it seems like every day for the last 2 years. But anyways, he had drawn this of why he didn't think Friday was the time to go Superman short on the market, and he was tweeting about it on Friday as well. And the reason he was saying was because he's looking at he's basically looking at trend, right? He's saying, hey, look, the last time we had a correction that brought us below this uptrend line was we had an A, B, C, D, E correction. And then after you hit E, that's when we sold off. And what he's seeing, it was the exact same thing, is that we're looking at the exact same series happening right here in the sequence. He even was talking about how the put premium was a lot of retail towards the end of the day, and he actually thought that the market was going to rally at the end of the day just to burn people. But basically what he was saying was like, look, if you pop up, you're going to hit for an A, you pull back for a B, go up for a C, and then we're on our way down for a D, and then ultimately we're going to rally up for an E before it breaks. So the reason I'm showing you guys this is because these levels correlate exactly with what the wave count I have is showing. Basically, even though the ABCD doesn't match the number count per se, I'm using that same trend line to show my target for SPY at 428, because right here, if we do dip tomorrow, or with the futures we dip and then ultimately we rally up, going down to this trend line for support is 43.05 pretty much or so. And SPY is 428.8 when the SPX is 4305. So that correlates 100% with what I'm saying, that if it does go to 428, buy it. So I'll be watching this in the morning, and I will definitely be going long if we touch 428. If we're lucky enough at open tomorrow to have 428, I probably won't even wait till after 10:30 to buy, just because I think that the reversal will occur early tomorrow, if it even opens right at all. So hopefully I'm right with this, or I'll be paying the price. All right, guys, if you like these videos, go ahead and hit like and subscribe.